Good evening, investors. Hope you all are doing well. Today we are going to discuss SBI Magnum Medium Duration Fund. But before we start this video, let me introduce myself. I am MD Imtiaz Alam and I am a registered mutual fund distributor and an IRDAI licensed insurance advisor. So today we will be seeing SBI Medium Duration Fund. If you want any guidance regarding mutual funds or any type of insurance, you can contact me in the given email ID or in my mobile number that will be provided in the description box. So let's see that who is this fund for, SBI Magnum Medium Duration Fund. You could see here suitable for long term 3+ years. So anybody who is wanting to invest, let's say more than 3 years. Minimum initial lump sum amount, it is 5,000 rupees. So if you want to invest one time, then you need to invest a minimum of 5,000 rupees. And minimum SIP investment, that is if you want to invest monthly, weekly or daily in this fund, then you need to invest a minimum of 500 rupees. The age of this fund is 21 years. So it is a pretty old fund and it is suitable for medium term capital appreciation. So let's see the details. We have clicked on view details. So at first we will see what type of fund it is. It is a debt fund and it is also an open-ended fund. Let me first clear you that in SBI Mutual Fund, I am a distributor and the series that we are going today or that we are continuing from the last 2-3 videos is about debt funds. So after we complete these debt funds, we will go to equity funds and various other funds, whatever is there. So let's see what is the objective of this scheme: to provide investors an opportunity to generate attractive returns with moderate degree of liquidity through investments in debt and money market instruments such that the Macaulay duration of the portfolio is between 3 to 4 years. However, there is no guarantee or assurance that the investment objective of the scheme will be achieved. This scheme doesn't assure or guarantee any returns. So what does it try to tell you? That it is created to provide opportunity to investors to generate attractive returns. So what are the attractive returns? Let's say from 6% to maximum 8 to 8.5%, 8.5%, but it does not guarantee you. So it is not a guaranteed fund, not something like post office or something like guaranteed return fund. This fund invests in market, definitely debt instruments, so the risk is a bit less, but it is not actually free of all the risk. So there is some sort of risk, but you could say pretty safe fund. The Macaulay duration of this portfolio is 3 to 4 years. So let's say what is Macaulay duration? We will search here. Macaulay duration. So what is the meaning of Macaulay duration? Macaulay duration meaning. So Macaulay duration is weighted average of the time it takes to receive a bond's cash flow, coupon payment and principal measured in years, and it indicates the bond's sensitivity to interest rate changes. A higher Macaulay duration means bond is more sensitive to interest rate fluctuation, resulting in greater price volatility. So we will see Macaulay duration meaning in mutual funds. Okay, so meaning is same. So Macaulay duration means whatever the amount you invest, after how much time will you get the amount back, or what will be the time after which the portfolio's money will be returned. So if it is longer, then the risk is higher. So you see here the Macaulay duration is, let's say, 3 to 4 years. So it is not that very much risky. Okay, you could invest here. There is no some sort of problem that your money will go away. Nothing will happen like that, and there is a chance that you will get good returns. Let's say when is the launch date of this fund? So it is 12 November 2003. From 2003 the fund is going on. The benchmark is 3 index, and the additional benchmark is CRISIL 10-year yield index. Expense ratio of this fund is 1.2% and exit load is for exit within 3 months from the rate of allotment is 1%. For exit after 3 months from the rate of allotment is nil. That means after 3 months if you sell this, whatever the amount is there in your portfolio, then there will be no exit load, nil. So since inception, so after 2003, like every year you got a return of average 7.78%. In the last 1 year you got a return of 7.56%, last 3 years 7.34%, and last 5 years the average return was 6.38%. The pretty good returns when you compare it to any other debt funds. The investment criteria: minimum you need to invest 5,000 rupees if you are going to invest for 1 year. Minimum additional lump sum amount. So let's say you have invested 5,000 rupees, then again you want to invest in lump sum, then you could invest in rupees 1,000 or more than that. and minimum SIP amount for this fund is 500 rupees. So if you want to invest in monthly, weekly or daily, then you could invest a minimum of 500 rupees. suitable for medium term capital appreciation. So if you, let's say you have 1 year, not 1 year, 3 years, 4 years, 5 years, you want to invest for that time, then you could choose this fund. The graph is pretty simple, so there is a bit less risk, so there is no much volatility in this fund. 1 year, 3 year, or let's say you see for 5 years, then there is no much changes in the graph, so it is a straight growing graph, no problem with that. If we see the riskometer of this fund, so the riskometer of the benchmark is moderate, but the riskometer of this particular fund, it is moderately risky. So there is a bit of risk in this fund, but you could invest it. So see, when there is risk, then there is again risk to risk. Investment objective: to provide investors an opportunity to generate attractive returns with moderate degree of liquidity through investments in debt and money market instruments, such that the Macaulay duration of the portfolio is between 3 to 4 years. So you have already seen this. What is the strategy of this investment? The scheme will invest its corpus in an entire range of debt and money market securities in line with its investment objective to provide attractive risk-adjusted returns to its investors through active management of credit risk and interest rates in its portfolio. So what does that mean? Whatever the money you invest in this fund, all the money, entire range of that money will be invested in debt funds or money market securities. So what does that do? It provides you attractive risk-adjusted returns, and the role of the fund manager will be to actively manage the credit risk and interest risk in this portfolio. So who is your fund manager? One fund manager of this fund is Mr. Lokesh Mallya. Who is Lokesh Mallya? Lokesh Mallya has over 17 years experience in research in the field of income market. He has been associated with SBI Funds Management, SBI FM, since 2014 as a credit analyst, and now has fund management responsibilities. Prior to SBI FM, he has been associated with Aditya Birla Sun Life Asset Management Company Limited as a fund manager and credit analyst. He is a charter holder of the CFA Institute, USA, and also a FRM charter holder of Global Association of Risk Professionals, GARP. So pretty talented and pretty good degree holder. Managing this fund from December 2023. There is another fund manager of this fund, that is Mohit Jain. Joined SBI in 2015. Prior to joining SBI FM, Mohit was working as a senior research analyst in CRISIL. So CRISIL is a organization or is a company that provides credit ratings to different companies or different agencies, that if he is capable of getting credit or not. He is a graduate in engineering from Satyabama University and has completed CFA level 3 from the CFA Institute, USA. So both have qualified their education in USA. Managing this fund since December 2023. So these are the fund managers and these are their qualifications. So let's see what is the portfolio breakup of this fund. So it has a good portfolio breakup. Before this, we have seen 2 debt funds. They did not have very good portfolio breakup, but this fund has a pretty good portfolio breakup. So what is there? 35.97% of this fund is with Government of India. 5% is with Torrent Power. If 5% is invested in Torrent Power, 4.67% is invested in Godrej Properties. 4.63% is in cash or cash equivalents and others. 3.96% is invested in Godrej Seeds and Genetics. 3.86% is invested in Avanza Financial. 3.54% is invested in Renew Solar Energy, Jharkhand 5 Private Limited. 3.34% is invested in Yes Bank. 3.42% is invested in Aditya Birla Real Estate Limited. 3.15% is invested in Rensar Global Private Limited. 2.8% is invested in Bharati Telecom. 2.76% is invested in HG Infra Engineering ITL Limited. 2.55% is invested in Godrej Capital Finance. Let me just zoom it. Industrial Capital Finance. So 2.42% is invested in NABARD, National Bank for Agriculture and Rural Development. 2.38% is invested in GMR Airports. 2.23% in Ashok Buildcon. 2.2% in Tata Power Renewable Energy Limited, guaranteed by Tata Power Limited. 1.27% in Latur Renewable Private Limited, 1.24% in Aadhar Housing Finance Limited, 1.17% in LIC Housing Finance Limited, 1.16% in Chalet Hotels, 0.91 in JM Financial Asset Reconstruction Company Limited, 0.76 in Aztec Life Science Limited, 0.76 in NJ Capital Private Limited, 0.72 in Government of India, 0.46 in Power Grid Corporation of India, 0.42 in Grihum Housing Finance Limited, 0.42 in Mindspace Business Parks REIT, 0.39 in Eris Life Science Limited, 0.39 in Motilal Oswal Home Finance Limited, 0.29 in Vistar Financial Services Private Limited, and 0.17 is Nirma Limited. So these are the companies in which your money will get invested whenever you invest in this fund. So let's see what are the sector allotments of this fund. So let me just increase it. So in sovereign you have 36.69%, financial services 20.5%, power 16.1%, 5.09 is invested in realty, 4.99 in construction, 4.63 in cash, 3.96 in FMCG, fast moving consumer goods, 3.42 in forest material, 2.32 in services, 1.16 in consumer services, 0.93 in chemicals, and 0.39 in healthcare. So pretty good breakup. Now let's see what is the performance of this fund. So if we see the compounded annual growth rate performance CAGR of this fund, in 1 year it gave you return of 7.56, 3 years 7.34, 5 years 6.38, and since inception 7.78. If we compare it with the benchmark, so in the 1 year it has underperformed the benchmark, in 3 years it has pretty decently performed with the benchmark, and in 5 years it has beaten the benchmark, in since inception it has also beaten the benchmark. Additional benchmarking we compare with CRISIL 10-year gilt index. In 1 year it did not perform in line with the benchmark, in 3 years it did not perform in line with the benchmark, in 5 years it has beaten the benchmark, and since inception it has pretty decently or pretty properly beaten the benchmark and given you good returns. So you could see what are the returns here. Now let's say what are the fund documents here. So we have scheme annual report. I will show you everything whenever you call me or you email me that you want to invest in this fund. So we will go in deep one-to-one Google Meet or any Zoom meeting, whatever you want, and I will guide you all in and out how to invest in this fund. So this was all about this fund. If you like this video or if you got any good information regarding this fund and you want to invest in this fund, then I will give a direct link of this investment in this fund in the description box. And if you want to invest with my help, if you want my knowledge or if you want my guidance regarding this fund, then you can contact me in the given mobile number, that is 73630848860, or you could contact me in the email address given in the description box. I will meet you there. We will go in one-to-one Google Meet or Zoom meeting, whatever you want. So that's all for today's video. Hope to meet you in the next video.